One of the secrets to high probability trading is timing. That's one of the things that I discovered in my overall trading journey, that in order for you to become a consistently profitable trader, you have to nail down timing, and not timing in the aspect of you pinpointing your trade at a critical support or resistance level, but coming into the market when there is liquidity. And this is something that I talk about in other videos, but guys, believe me when I say it is extremely crucial, because I came to the realization that a lot of traders who come to the market, and some of you guys might just be coming into the market at random times of the day looking to execute a trade. I know that when I first started trading, this was something I did. And until a couple of years ago, I started to discover the importance of time and price, that the market is likely going to move at a specific time. So let's say, for instance, you are trading gold and you want to figure out the best time to trade this currency pair for high probability, low drawdown, and that means that you're not sitting in a trade that is stalling and nothing is happening, because who likes that? You're trying to figure out the best time to be in the market so your targets can be hit at a quicker rate, or even you can be stopped out and then having to figure out, okay, should I be in another trade or should I walk out for the day? So one of the things that I discovered is very, very simple. Open your currency pair, whatever currency pair that you're going to be trading. If you say you want to be trading the New York session, or that's the time that you want to trade, or you want to trade the London session depending on where you live, what you want to do is look at the currency pair and identify the biggest moves, right? The biggest move will tell you the best time to trade that currency pair. So taking a look at gold, as you know, gold is my bread and butter. I love gold, and I will trade gold and maybe other currency pairs from time to time, but gold is my standard. So one of the things that I did when I wanted to start trading gold is I started to look at the best times to trade gold just by looking at the move. The very first thing you want to do is you want to identify when liquidity is flowing into the market. And you can identify when liquidity is flowing into the market by the candlesticks, right? The volume, the strength of each candlestick. So what we can see here with gold is we had premium price, right? And I call this bearish candlestick. Let's zoom in here. Premium price, because it was the last push that sellers gave buyers an opportunity to get into the market. So this was the last push here at about 8 a.m. and then 9, 10, 11, price pushed up significantly. And after 11, the market literally just consolidated until the next day. And we can see that the next day we got 7, 8, 9. We saw the move here. So this is about 100 pips. The day before that, we saw 200 pips worth of movement. So what you simply want to do is just that. You want to go over to the charts and identify the biggest swings in price, the biggest move. When are they happening? Because that's going to give you confirmation as to, okay, if I'm going to be trading this pair, I want to be ready at a particular time. So you see this 8, 9, 10, 11. And then after that, the market literally pulled up, but it was very subtle movements, very like consolidation like movement. It wasn't moving too crazy. And we can take a look here. We can see this move as well. And we can say, okay, this is 6, 7, 8, 9, 10, and 11. Gold moves very well during the New York session. The New York session overlaps the London session. So there's a lot of liquidity that flows into the market at that point in time. So it's very important that if you're going to be picking a pair that you're going to be trading, you want to identify its dominant session. So if you're trading a pair like pound dollar, you know that you're likely going to experience high volume or a lot of liquidity come to the market during the London session and also during the New York session as well. Outside of that, you're likely not going to be experiencing a whole lot of liquidity in the market. So it's not a pair that you want to be trading during the Asian session. So what I like to do is identify the biggest moves. And what we can see here, it took about 3-4 candlesticks for us to get 132 pips. And this is from 8 a.m., 9, 10, 11. And you take a look here, you can see this move. And what time is this? So this is 1 a.m., 2 a.m., 3 a.m., and 4 a.m. So London session, if you're going to be trading London session, I always recommend starting your London session at 2, the same way I start my New York session at 7. You want to come into the market an hour at least before the session opens, because you have something called pre-market. And so this is pound yen. We know it's going to move somewhat, well during the New York session and also during the Asian session as well. And that's the video, guys. As always, I hope you took something away from this. One of the things that I always recommend after watching my video is to take it to the charts. Don't just take my words for it, but pick your currency pair that you're going to be trading and take it to the charts and see the difference that it makes, if it makes any difference, and if it's something that you can use. If it's not something that you can use, discard the information. That is just the game, right? Because you're going to be learning a lot of things, and some of them will be useful to you and some of them won't be. This particular way of looking at the market was extremely useful to me, and as a result, I wanted to share that with you. As always, thank you for watching. Hope you found this video insightful. On your way out, don't forget to hit that like and subscribe button, and feel free to leave a comment down below. If you have nothing to comment, you can comment LiveFree. Thanks for watching. I'll see you in the next video.